Hi there and welcome back to another edition of Dummy's Guide to Investing, and this is our how-to series. This is where we take a look at all the different things online and give you an easy visual way to understand different internet, computer-based investment strategies. And right now we are looking at graphs, and I just had to read a stock graph because sometimes it can get quite complicated. So this is the third series in our stock graph section, and we are continuing to take a look at Apple Inc. here on TradingView.com, which is a great software for analyzing and analytics of different stock graphs, and they provide a whole various different forms of stock graphs to choose from. Right now we're going to look at hollow candles and go into a bit more details about candles than in our last segment, which was just the basics. So here we're looking at the Apple stock over the course of 1 year, and we can see the general movement of the stock just by the different flow of it. But for the trained eye, you can get a lot of information by looking at these little candlesticks and just what they represent by giving a lot of information right off the bat. So we've been taking a look in our previous sections on this day, which was September 14th, which was obviously a really good day for Apple. And basically the way we describe it here is that the bulk of the thick part of this line, which is called the candle, is actually indicates the open and the closing price of this stock on this particular day. So on this day it opened here at 108.67. On this day it closed at 111.64. Now the other ones are filled in. Now the hollow ones indicate a price closing higher than the open, which indicates an upward trend, a buying trend, buying pressure, whereas the filled in graphs indicate the stock price closing lower than the opening price, which shows selling pressure. So this, at a general glance, you can see the open and the close, the thickness of each line. But then there's these lines that protrude upwards and below the open and the close, right? So you got to wonder, well, what is that? Well, the line that goes up and beyond the candlestick, or known as the shadow, indicates the day's volatility range. So on this day, which was April 4th, even though it closed higher than it opened, here at 110.92, we can see that it traded all the way upwards as high as 112.11. and traded slightly lower than its open. So on lines that generated below the candle, the lower shadow or the upper shadow, indicate the day's trading below and above the open and the close. So that is the short of it. But there's a lot more technical analysis that goes into and usefulness with candlestick graphs, and that's why I will show you a couple of different examples of just what I mean. To go into a little bit further knowledge, I'm going to bring you some reading material here to help you understand what I mean regarding the long versus short shadows, which are the lines that go up and beyond the actual candles, the thick part of it. So right here is a bit of an explanation, the long versus short shadows. You can see the upward is called the upper shadow versus the lower shadow. And the upper and lower shadows on a candlestick can provide valuable information about any given trading session and just what the day looked like. So the upper, as we discussed, the upper shadows indicate at the high point of the day's trading, and the low point on the lower shadows. Candlesticks within long upper shadow, which let's point one out here, one that's really obvious. Let's say this day right here on September 4th. Here on September 4th, we can see a large upper shadow, and candlesticks with a large upper shadow indicate the buyers dominated during the session. The bid price was higher, so that's what pushes the upper candlestick here, whereas the lower ones indicate a weaker close and stronger stronger selling pressure. So that is essentially what the long and versus short shadows indicate. throughout any given trading day. Now, there's a lot more we can get into, and I don't want to, because this is our dummies guide, we're going to keep it simple, but we are going to talk about next about spinning tops. Now, spinning tops is, instead of even trying to show you on the graph, I'll just give you an idea what they are right here. Now, spinning tops are candlesticks with a long upper shadows and lower shadows with a very small candlestick body. One long shadow represents a reversal of sorts. Spinning tops represents indecision. The small body, whether it's hollow or filled, whether it traded open, traded higher, or ended up closing lower, shows very little movement from open to close. And the shadows indicate that both bulls and bears were active during the session. You can see there's a lot more volatility than its open and close here. Neither buyers nor sellers could gain the upper hand in this day's trading. So after a long and advanced or white long candlestick, the spinning top indicates weakness among the bulls and potentially change or interruption in trend. After a long decline or long black candlestick, a spinning top indicates weakness among the bears and a potential change or interruption in the trend. So you can identify this at some times, and it can give you a good indication of what's kind of going on out there in the on the day's trade. Another useful aspect of the candlesticks is right here, what's known as the marubozu, which is a Japanese word, and this is essentially where there was no upper or lower shadow, that the entire day's trading was within the close and or the open. So they don't have upper shadows or lower shadows, and of course the white indicates that that it was a positive day, that it closed higher than it open, and vice versa on the black, it closed lower than its open, but without any volatility range above and beyond the open and the close price. So that is some of the basic indications when you're looking at candlesticks. So that is the most important things to look at, and there are definitely more detailed things that we can get into at a later point, but I don't want to overcomplicate it. So there you have it, guys. Thanks again for attending another and listening to another edition of our how-to series, this time going into further depths about candlestick graphs. So stay tuned right here on Dummy's Guide to Investing, where we're with you every step of the way.